How much time do we want to allocate for our family versus working versus growing ourselves as people? And being able to have a nice income stream and be able to free yourself from that tax burden are really nice tickets to get you to that freedom.
Welcome to Alt Investing Made Easy, where we explore the complex world of alternative assets. I'm Roland, a securities attorney, investment advisor, and your co-host.
And I'm Sarah, an investment advisor and corporate attorney, and your other co-host. We'll guide you through real estate, private equity, and more, making complex topics accessible.
Tune in for insights that empower your financial journey.
Let's make alt investing easy, one episode at a time.
Welcome, everyone, to Alt Investing Made Easy. Today, we're here with our friend and colleague, Bryan Hancock, and he's going to present information about his Texas Freedom Fund, which is an oil and gas fund. And we'll also get to learn a little bit about oil and gas investing in Texas. So, Roland, you want to give some more of an introduction for Bryan?
Yeah. Bryan, I'll give you a welcome. Welcome to Alt Investing Made Easy, and thanks for being a guest today.
Yeah, thanks for having me.
Yeah, I want to say how happy I am to have Bryan on as a guest. First met Bryan at a kind of a meetup event, and I was speaking about securities law issues, and he was in the back, and he asked a hard question, and I really had an opportunity to be mad at this guy. Why is he asking me the hard question? But I said, "Oh, I'm so thankful that there's an intelligent person here," and it was, really it was a very good question. I forget what it was about specifically, but I remember overcoming my insecurity and going back to the back of the meeting hall and introducing myself to you. And I'm really glad that I did, because it turned out to be, it's got to be about 10 years ago now. And we've worked together on different deals, and now you're a client of our firms, and we've been working on this oil and gas investment fund that we want to tell everybody about. But Bryan, maybe start out by telling us a little bit about your background and particularly touch on your experience with real estate. I think that's relevant.
Yeah, hey everyone, I'm Bryan Hancock. I'm originally from Austin, so I'm one of the few people that still lives here, and I think Roland's in that same camp. But
Well, yeah, you went to Lanier, right?
Lanier High School.
I went to McAllen.
It's not Lanier anymore. My parents actually both grew up here too, so they went to McAllen High School back in the day. But yeah, so I'm a longtime Austinite. Bleed Texas orange. I don't know if that's good or bad for your viewership, but kind of polarizing, right? But grew up here, have an engineering background, so I went to the engineering school here, and escaped during the .com bust to go to Fort Worth for about 4 or 5 years. So I spent some time up there. I worked at Lockheed Martin on the Joint Strike Fighter, on their flight control system, and some other work for that. And they were gracious enough to pay for my MBA program when I was up there, so I actually got that from TCU. So kind of a mixture background of engineering and technical work, and then also business things. I really kind of always considered myself more of a business person than an engineer. So I like to say I'm a recovering engineer now. But all the analytics and stuff I can still geek out on for sure. But yeah, the last 20 years or so, we've done all sorts of crazy real estate investing things. A lot of that time has been in the ground up development space. So I like to say we were doing ground up development in Austin before it was cool. So there's been a lot of gentrifying neighborhoods in town. So it's been very fashionable, at least in the last 5 years, to come in and tear things down and start over. So we were doing that in the wake of the mortgage crisis, kind of like the 08, 09 era, back when banks weren't loaning anybody any money. So we kind of started out just getting a pool of guys together, just real simple partnership agreements, doing one or two at a time, and then we were pretty successful with it. So what had ended up happening is that capital was trying to find its way into our deals. So that kind of forced us to learn more about securities law and kind of the distinctions there. So that grew into individual syndicated deals, and I've done a couple of different private equity funds in my career as well. None of which I've started from scratch from myself, but that's what we're going to talk about today. It's the first one I've done all by myself. But we've done all sorts of things, apartment complexes, coaching programs. I ran a a network called the Wealth Investment Network, and had lots of guests for that for years and years on all sorts of alternative investment topics. So I like to consider myself a deal junkie. So anywhere there's money to be made, or there's, in theory, some sort of illiquid asset where you can take advantage of opportunities like that. There's a lot of risk to go with it, but if you know what you're doing, there's a lot of reward to go with it too. So those are the sort of projects that I try to find.
Well, and Sarah, let's not forget to find out about the podcast that you and Melissa have too, Bryan, right?
Yeah, so we have a new podcast. Well, I guess it's not brand new, but it's a couple years old. It's called the Executive Connect Podcast. And we actually just passed 1,500 subscribers as we're shooting this. And right now it's growing 30% a month in terms of our subscribership. So we're really excited
cool.
about that. Have learned a lot about podcasting and media along the way, and we're certainly not experts, but we're a little bit past the beginner stage now. So hopefully growing into a new class of problems with that.
Well, that's great.
So, Bryan, I think you mentioned that, and we're going to talk in detail about the Texas Freedom Fund itself, which is, as you say, maybe the first fund that you've started from the ground up itself. But would you like to tell us a little bit about, you have this experience in real estate, and then you've kind of pivoted over to oil and gas, which isn't really a real pivot because there's always an underlying real estate element to oil and gas. But it would be interesting to hear, if you were going to talk to an audience who doesn't know much about oil and gas investing, what would you like to share just before we talk about the particulars of your specific offering?
Yeah, well, one of the things I'd like to share is that I'm not an active oil and gas operator, and I'm not pretending to be. The thing that I think a good fund manager provides in a setup like the one we have is being able to diligence projects really well. So that's one thing I feel like I do have a lot of. So the firm that we're working with primarily, but there's going to be other operators as well, has been in the game for over 35 years. They've probably forgotten more about oil and gas than I will ever care to know. But some things are very similar between the two different asset classes, and, really kind of any other sort of alternative investing. One of the big things in the angel space people talk about a lot is it the jockey or the horse? And that's just a whole different risk capital type of project in the angel space. It's generally a 1 or a 0. So, those sorts of projects, you're trying to make one investment that pays for the other 9 that fail, What I do like about the oil and gas space and what attracted me to it is that there's a lot of great tax benefits for it that are specifically applicable for folks that have the very fortunate first world problem that we have, a very high active taxable income. And I had never heard of this, believe it or not. Growing up in Texas, nobody ever talks about oil and gas investing in the Austin area. It's all real estate, startup, things like that, right? I'm sure if you go out to West Texas, it's very different. This is probably no big deal for them. They know all about it. But it's kind of awkward to talk about that. It's like, people think about Texas and they're like, everybody down there does oil and gas, but that's not the case in Austin. But one of the things I really like about these projects is that there were tax benefits that were put in place in like the mid 80s in order to encourage small producers to drill, soda straws in the ground looking for oil like this. And that's a certain sort of risk profile when you do that. Well, one of the things that's happened since that, all those tax, items were passed in the mid 80s is the technology has changed quite a bit, and therefore the risk profile has changed quite a bit. So now you don't just stick a soda straw in the ground, you turn it sideways, you go through a giant shale formation, and you blow it up and you suck oil out. Not only that, you have all of the Texas Railroad Commission data for projects all around you, if you select them the right way or the sponsors the right way. And so just from a risk-adjusted standpoint, and Roland, I know you like to talk about the Sharpe ratio a lot. So from a risk-adjusted standpoint, it's a really, to me, a really good bet. It's really hard to not find oil in these projects, provided that you select them the right way. Really, the bigger risk is the price of oil. So if the price of oil goes from 90 to 40, or some giant precipitous drop, which does happen, that's really the big risk in the projects. Or you're sucking it out of the ground maybe slower than you had anticipated. So these are all things that we've learned. One of the things I like about the outfit that we're dealing with right now is they have a formal broker dealer too. So all of their securities and compliance work is done by the book. It's a little frustrating sometimes because you can't email them. I can text my broker, but he can't text me back. So, it's a little awkward trying to deal with it like that. But I kind of like the fact that it's very protected and they've got it set up really airtight from a security standpoint. For them, one of the challenges is, that's great from a compliance standpoint, but it's real hard to get the word out like that. So what we're trying to do is provide a lot of the newer securities regimes with Reg D Rule 506C to be able to broadcast and advertise and share this opportunity with investors, and still stay compliant with their securities setup. So that's sort of the value that we're providing in the transaction, not the oil and gas expertise. But not only that, instead of investing, $250,000 on average per share, all of our shares are $25,000. So it allows people to, even if they do perceive that there's still lots of risk in the project, which there is, they could sort of try before they buy at a very much, lower amount than they would be able to if they had to go invest directly with the operator.
Yeah, I think that's an important point to be making, Bryan, is kind of the whole motivation for doing this is trying to make these investments in oil and gas more accessible to people that want to invest more like 25 to 50 versus maybe 250, which might be a minimum on a deal that you're looking at. So it's more of a fund of funds concept. And you said that you're not an operator. You're not the one out there digging in the dirt, but you're either going to be buying working interest from that person or from somebody that has partnered with the operator. And so you might be investing in another limited partnership. But the idea is one reason why I like what you're offering is that if I am that person that thinks that I want to gain, $250,000 worth of exposure to oil and gas in my portfolio, I can either invest in that one deal that requires that as a minimum, or maybe I can invest in your deal and get 5 investments out of it and get the benefits of that diversification. That's always something we talk about in the investment world is diversification can mitigate risk. And I can have you as a manager and ask you all these questions about the knowledge that you've gained about all the different, like you said, all the different funds that you've done due diligence on. Why, you picked this one over that one. Why is that, Bryan? And so you can position yourself as a little bit of an advisor, and then you're really adding value to people that want to achieve, a diversified oil and gas portfolio.
Yeah, I mean, to me, this is a very common issue with the way securities, arrangements are put together too. There's a common issue in the angel investing world. There's the what people want to invest, and then there's the what the sponsor can actually support, right? In terms of all the compliance and everything. So the deal has to be able to support both sides of those equations. And from the sponsor's point of view for these oil and gas projects, that's why their minimums are so high, and the $250,000 shares, that kind of puts it out of the reach of a lot of folks, including, and especially, which is really who we're aiming most of our opportunities at, corporate executives, $250,000 for somebody that's making even $500,000 a year is still a lot of money. And to your point, do you really want to go put $250,000 down on one project? Or would you much rather spread that across 10 projects, or 5 projects or some smaller number? Even if you got the best oil and gas operator in the world, they are still doing underground construction. So that, there's risk in it, right? So wouldn't you much rather have that risk spread out rather than all concentrated in one project?
So Bryan, why don't you introduce exactly, you've got the Texas Freedom Fund 1, which is the fund that you have currently.
Right.
And why don't you give us some particulars about that? For example, your minimum investment amount and, any information about yourself as the manager. I think we've just gotten that. But just to have it all contained in one little part of this episode, let's hear exactly what the investment opportunity is.
Yeah, so we very purposefully have tried to make the investment as simple as we could. So, when I got into this, I probably talked to, I don't know, 15 different securities attorneys that do this all the time. And there's hurdles and there's crazy things and there's clawbacks and there's all these different ways of setting them up. But one of my big beliefs is that a confused mind says no. And I just really have purposefully tried to keep it as simple as possible. So the way we've set it up is if you invest in one project, which some people may still want to do, it's an 85-15 split, 85 to the investors, 15 to we as the sponsors. And if you choose to invest in more than one project in the successor fund, the way that it's set up, what would happen is the money would come back into our fund and we would go reallocate it into the next deal, which is exactly what we were just talking about with regard to being able to diversify the money. And believe it or not, that's a lot more complicated than it sounds. There's all sorts of intercompany agreement things and distributions and weird ways of setting it up. So believe it or not, Roland and I really had to think very hard about how to set this thing up the right way to make it as simple as I just made it sound. And then it's a $25,000 minimum. I'd say the average check size is probably going to be on the order of $100,000. What's great about the fund is we have what are known as intangible drilling costs. So not 100 cents on the dollar, but a significant portion of the money that people put in the first year is going to be deductible against their ordinary active, and that's the key here, active taxable income.
Yeah, maybe let me jump in, Bryan, real quick. A lot of people, their mind goes to the material participation rule, and this is an exception from that. So this is without regard to material participation. I just want to note that.
Yeah. Yeah, and I guess one thing I should point out, and Roland could probably put some more color on it, but you do start out as a GP, an active GP in these projects, but the way that it's set up is after we get through the IDC portion of the project, it will convert to a limited partnership as well. So,
yeah, and just this is one of the things why having Sarah and me as a host here and explaining all this as attorneys, we can really explain it that ordinarily investors would invest in limited partnership interests rather than general partnership interests. The last thing that we would ever counsel anybody to invest in is a general partnership interest, because that carries with it unlimited liability. And that's one of the trade-offs here, is that in order to qualify for that deductibility of the IDCs in the first year, it's a huge tax benefit. You have to invest through an entity where your liability isn't limited. And so a lot of the what we had to get our minds around, Bryan, is disclosing. As always, disclosure is so important, but make sure that we disclose that fact that you're investing in a GP interest. But then how do we manage that risk? How every business manages the risk is insurance, right?
Right. And the operator actually provides some indemnification too. So having a big boy operator that's been doing it for a long time actually provides a degree of liability protection in itself. But insurance, and there's other things that help to indemnify the risk as well.
And then just to complete the thought, and Sarah, I'm sorry I'm talking a lot here.
No, go for it.
Upon completion of the drilling, the general partnership interest will be converted to a limited partnership interest. So that's another way that risk is mitigated, is once the drilling's completed, you've gotten to take all the IDCs as a deduction, then you're converted to a limited partnership interest.
Right. So there is that period of time where there is the risk, for sure. One of the things that my oil and gas broker has told me is that in the history of these deals being operated, there's never been a GP that's been sued successfully for something like this before. That's not to say that the risk is zero, but it's as close to zero as I think they could make it. There would probably be riots in Texas if somebody did actually get, sued over one of these things, because it would discourage a lot of investment for sure.
Well, it also is interesting to hear you, Bryan, just to take it back to basic principles for alternative investing. And we say this all the time, and I know you already mentioned it, and that is that when you get into an alternative asset class, such as oil and gas here, again, it's very important that you understand the people that you're relying on. whether that's the manager, the general partner, or in this case, the operator. And so it's just basic good due diligence to understand those people, have a lot of conversations with them. I'm familiar with the operator that you're talking about, and he makes a lot of time to have a lot of conversations. They take people down so that you can see the actual activities that they're undertaking. And I think I think that's probably common in the oil and gas industry. They want people to understand, if you're coming in this active capacity, what it is that you're coming into. But in the end, it's the same basic principle, isn't it? You need to understand who you're doing business with in the process, who you're investing with.
Well, and I think that's part of what makes it so challenging if the $250,000 is the minimum, too. Because one of the things I like to tell everybody is that we're always more careful with investor money than we ever are with our own. So my wife and I have been investing in these projects personally for about a little over 2 years now. And we very purposefully have not shared the opportunity with anybody else, even though I've contemplated an arrangement like the one we have set up for a while now, because we very much wanted to make sure that they did what they said they were going to do. We put our money in. Okay, great. You said you're going to do X. Let's check the box. Did they do X? Yes. So every month the checks have come back. They've been about the size and shape that they should have been. They've done everything they said they were going to do. We were able to take everything successfully against our active taxable income last year, even though it was a little challenging explaining it to our CPA firm who wasn't familiar with that. So we're in the process of switching that now as well. But yeah, we wanted to make sure we did all of that diligence personally before we put our name out there. And we put our, sort of our persona next to this idea. But I feel like we've gathered enough information now where we're very comfortable sharing it with others.
I think it's a great, honestly, just as an aside, I think because you're so right about that, taking a leap into oil and gas. If you're from West Texas, it might be an easy leap to take. If you're from Texas, it's an easier leap to take. But if you want to have appeal across the country, it's a big ask to put such a chunk into it. So it's really nice the way you've made it available in smaller chunks. I think that's a really important point to note.
Yeah, and everybody should check on their own tax setup. But, the people that actually benefit from this, ironically, the most are the people in the high tax states too, California, New York, places like that, because they've got a bigger tax liability, including their state tax liability.
No, that's a good point.
Well, that's great, Bryan. Well, we always like to hear a little bit about your personal story, and it's expressed by different people in different ways. I'll try to ask it this way. What's your why for doing all this? What gets you up in the morning?
Well, you kind of give it away a little bit with the name of the fund, Texas Freedom Fund. So all of this is really after freedom, but to your point, for what end, So what's great about this is freedom from the taxes, right? And then also what's even better about these deals is that, on the projects that I have at least, they're like on the order of like 30 to 50% returns annualized. So you should get your money back in the first 2 or 3 years. And then after that, everything else is what I used to call in the real estate world mailbox money. So 1.5–2% comes back in mailbox money. After that, it's great, in terms of trying to buy your freedom, right? So, you put your money in, you get the tax benefit, you get your money back, and then you've got that nice stream of income that provides the freedom that everybody's seeking. But you really do have to have a why, and my wife and I are both deal junkies. We're very much going to be working for the rest of our lives, no matter how much we kid ourselves that we're not. But we just really want to be working on the things we want to work on instead of, the things that everybody else thinks that we should be working on. And I really think that's our biggest why right now. How much time do we want to allocate for our family versus working versus growing ourselves as people? And being able to have a nice income stream and be able to free yourself from that tax burden are really nice tickets to get you to that freedom. And that's very purposefully why we've set this up as the Texas Freedom Fund, because we very much want to be able to provide that opportunity for other folks to be able to achieve the time freedom that they want.
I like that. I mean, that's something we see a lot, Sarah. Maybe it's just common in the investment industry generally, but pat ourselves on the back a little bit. It's the people that we attract to us is they're really trying to deliver value to investors and trying to give investors the benefits that they've achieved themselves. Bryan has experienced success in investing himself with this, and he sees how that same success could be achieved by others, and he wants to spread that as a benevolence. And, he's doing this as a business, of course, but I think, the clients and coworkers, colleagues, associates, people that we work with that I admire the most are the people that are trying to deliver value. And I for sure can say, oil and gas may not be the right investment for you, not knowing your particular circumstances. And I'm speaking to our audience members, but we for sure can say that Bryan operates with integrity, and he's always shown me that. And Sarah's not known him as long, but I'll just make that statement from my own personal experience. So if you're considering a exposure to oil and gas in your portfolio, I think you should for sure give Bryan a call and give careful consideration to what he's offering.
Thanks, Roland. Hey, after the episode.
Oh yeah, for sure.
So, Bryan, I know Roland just asked you about the why of it, and you gave a great answer. But also another thing I like to ask about is something that's a bit more personal, which is, when we interview people who are operating in the alternative investing space, everybody's doing a lot of things at one time. And arguably, I mean, I'm that way as well. Roland is that way as well. And maybe that's part of being slightly entrepreneurial or very entrepreneurial anyway, is that you need a few plates in the air at the same time to kind of be happy. But at the same time, there have to be tools that you use, right, to maintain yourself. So we've had different answers from people about sometimes there's like a family motto that they have, or a practice, like a life coaching style practice that they go through every year with their spouse, et cetera. So do you do anything like that, you and Melissa? You both have so many things going on.
Yeah, my wife Melissa is much better at this than I am, I will profess. Like she actually runs a lot harder than I do, if you can believe it, Roland. But she's very purposeful with getting up like at 5 a.m. and going and doing her yoga, making sure she schedules massages and facials and those sorts of things, because all of that is needed to balance things out. But I will not profess to you, Sarah, that we have the magic elixir for this, because there's never a spare moment in any day between all the stuff we've got going, or getting the kids where they need to, or making sure that we're being intentional with our time with them. It's kind of like the Native Americans, like no part of the buffalo gets wasted.
Yeah.
No part of our day gets wasted, or really the whole week. So Roland can attest to it, but it's not uncommon to get emails from me at like 2:30 in the morning or some weird time too. So I just generally have a hard time staying still and staying present. So I had kind of a life reset thing happen in the 2017 era. And one of the things I've learned a lot about is gratitude journaling, and also meditation practices too. So those are two of the things that I actually took the Science of Happiness classes that are offered online, and that's really I probably took 4 or 5 of these things, which just kind of obsessive like I am, and that seems to be the two things that were the most common throughout the courses, were those two practices.
I love doing gratitude journaling. I did that for a long while, actually. And it's funny that you say meditation, because we talk about meditation in here all the time. It's almost every episode, right, Roland?
Well, and I can attest, Bryan, I was friends with you when you were going through some darker times in your life. And I can, that's one of the reasons why I believe in you as a person, is just because I looked at how you took personal responsibility, and that personal part of our relationship is hard for me to separate from the business side, just because I remember the changes that you made and the ownership that you took, and that just further demonstrates the integrity. I'm a fan of Bryan Hancock, if you can't tell.
Thanks, Roland.
Yeah. So is there any last thing that you want to share, Bryan? Because we're coming up on 30 minutes, super efficient. And I think we have good information about your opportunity, but any just last thoughts?
No, I mean, I think that that's really the highlights are, great tax benefits, but you shouldn't invest in any project because the tax benefits, the project itself needs to be standalone. I like to tell everybody that, the project should be great, regardless of whether or not it's going to save you money on your taxes. You shouldn't let that tail wag the dog. But people that have a very high taxable income, I think it's a great opportunity to look at for you. And it's something that should return capital in about 3 years and then provide a nice steady income stream after that. I've been investing in all sorts of crazy things like this for 20 years now. And this is the best thing that I've found. Hopefully there's better things out there. I'm sure there's probably lots of opportunities, but if it sounds interesting to you, love to have a conversation about it.
Okay. We'll share your details in the show notes. So,
All right.
Well, Sarah, I think that sounds like a good place to wrap up. What do you think?
yeah, I think that does it. Thank you so much for joining us today, Bryan.
Yeah,
For
thanks for having
sure.
me.
And thanks everyone for joining us today on this episode of Alt Investing Made Easy. Please like and subscribe to our channel.
And remember, everyone, take aim with your alternative investing strategies.
See you next time.